Hello, and welcome to Lesson 18 of the Masuda Ashi Introductory course. Today will be the second lesson on the 6-color spectrum. The chart we have showing here at the moment is 1001. This is the Nikkei 225 weekly chart. Usually until now we've been looking at the daily chart, but today we'll be looking at the weekly Masuda Ashi chart. Now, in order to show the 6-color spectrum, we go down to the button here that says spectrum, and that will bring up the 6-color spectrum down here. And because we're looking at the Nikkei 225 up here, the index value will choose N225 here, the Nikkei 225, for the 6-color spectrum as well. Now, just to recap on the 6 colors and their meaning, we have white, yellow, green, red, blue, and black, which is represented by grey. Now, the 3 uptrending colors were white, yellow, and green. These were assigned the alphabet letters F, A, B, and the 3 downtrending color patterns were red, blue, and black, with their alphabet letters C, D, and E. So even within the group of 3 uptrending color patterns, the FAB, B was the strongest pattern, we said. That is when the short-term Masuda Ashi real body line is above the medium-term line, which is also above the long-term line. And the white F pattern is termed the end of the decline. The yellow pattern, the A pattern, is called the initial rise, and the B pattern, which is the green color, is the strongest of the uptrending group of patterns, and this is called uptrend. And the red color C pattern is the end of the rise. The blue D pattern is the initial decline, and the black E pattern is downtrend. Now, the first point to watch when looking at the 6-color spectrum is the boundary line between the green zone, the green patterns, and the red patterns. Okay, what you can see here where I have the mouse is that the green area is declining quickly, declining sharply, and the red and blue area is increasing. Now, as we have just mentioned, the white, yellow, and green represent uptrending pattern stocks, and red, blue, and black represent downtrending pattern stocks. So by looking at the boundary line between the uptrending and the downtrending stocks, you can see at a glance that in this case the number of good pattern stocks is falling off very sharply, which means that within the index, the number of stocks, of the 225 stocks that make up the Nikkei 225 index, the number with bad color patterns is increasing, or vice versa, the number with good patterns is decreasing. And I mentioned at the end of our previous lesson that we were going to look today at the 6-color spectrum because we can use it as a leading indicator. Now, the 6-color spectrum, once you delve much deeper into it, you'll realize that it contains a lot of information, but for simplicity, we'll just focus on 2 examples today. Now, can you see anything strange from looking at the 6-color spectrum here and the Masuda Ashi chart above? Well, for example, as we just pointed out here, the boundary between the green and the red color patterns has kind of fallen off sharply here. This means that the number of uptrending stocks has declined rapidly, whereas the number of downtrending stocks, the bad pattern stocks, is increasing. However, what's kind of counterintuitive is if you look at the index, the Nikkei 225 itself, it's continuing in an uptrend, an upward rising phase. So the index is continuing to increase, get stronger, whereas if we look at the makeup of the index itself, we can see that the number of stocks with good patterns is actually decreasing. So why could this be? Well, there are a number of factors that could be behind this. For example, some of the higher priced stocks within the Nikkei 225 could still be continuing strongly and pulling up the overall index value, whereas the number of less pricey stocks, the number of bad stocks that are not as influential on the overall index value is increasing. So what can we glean from this? Well, for example, if you were to have some of the Nikkei 225 stocks in your portfolio and you saw that the index value was continuing to rise while the content of the index itself, the number of stocks with good patterns, was decreasing, then you might take this as a leading indicator that the index is not likely to be that strong forever, and now might be a good time to take some profits and lock those in. The other thing is, when we look at the index here itself, you can see we have one rising phase here where the short-term Masuda Ashi line is above the medium-term line. Comes back for a dip, but then continues to increase on a second wave, and the short-term Masuda Ashi line remains above the medium-term Masuda Ashi line. And also the index value itself, the peak here is higher than the peak before. We'll now have a look at the 6-color spectrum when we were at this market peak. We've brought the white basis line here to June 26th. You can see here from this pink box with the 87.5% that the aggregate of the white F, yellow A, and green B patterns was overwhelming at this point. And this marks the peak of the first kind of wave of this uptrend. It goes back into a dip. And we'll have a look now at the second peak, which is about here. Now, this is as of the 21st of August. It's almost a couple of months later. Remember, we're looking at the weekly Masuda Ashi chart at the moment. You can see here that the aggregate of uptrending stocks, the F, A, and B pattern stocks, is now only 77.7%. So it's dropped down around 10%, and similarly you can see that the green B pattern stocks are also declining. So even though the index itself is getting stronger in terms of the absolute index value, the constituent stocks, the patterns of the constituent stocks within the index are deteriorating. Now, normally when people would look at a chart such as this, they might expect that the index could go up again on a third wave, but now that you have the Masuda Ashi chart software in front of you, like this example, you can tell that in fact the number of deteriorating stocks, those with the downtrending C, D, and E pattern stocks, are increasing. So rather than expecting the index to go up any further, you might think that this marks a peak and that the index will either go sideways or it could even go down if this decline picks up momentum. So hopefully you've got an idea now of how the 6-color spectrum can be used as a leading indicator. We first of all discussed the delineation or the boundary between the green and the red here to see at an instant whether there are more uptrending or more downtrending stocks within a particular index, in this case the Nikkei 225. And as we saw here, the sharp decline in uptrending stocks or the rapid increase in downtrending stocks was occurring at the same time that the index was actually getting stronger. And again, we use the 6-color spectrum in the sense that we can probably quite accurately guess or estimate that the index is not likely to go up beyond this point. This should mark a peak because the constituent stocks are deteriorating rapidly. And as even though the peak here is higher than the previous peak, the number of uptrending stocks is actually decreasing. You can see a downward slope almost in the uptrending stocks while the index is actually going up. So keep an eye out for these anomalies and use the 6-color spectrum in this way as a leading indicator. We've only shown a couple of examples here, but you can do this for many other stocks. And the more you kind of look back and practice interpreting these patterns using the predictor line group and in conjunction with all of the other Masuda Ashi chart features, the more capable you will become at interpreting the Masuda Ashi chart and identifying trends at a glance and finding other means of assisting your investment decision making process. Anyway, that's all for lesson 18. The next lesson, lesson 19, we will discuss the Masuda ratio. Now, the Masuda ratio is again based on the relationship between the 6-color patterns and the 6-color spectrum that we've just been looking at. So that's the next step, and that's our second last lesson. Lesson 19 will be followed by lesson 20, in which we'll do a recap of everything that we've looked at so far. Until then, thank you for listening this far, and see you in the next lesson. Goodbye.